Hi, my name is Maciej Malysz and I'm a partner at Inovo. We are an early stage VC fund that is focused on backing the most ambitious founders from Poland and CE region. Today, I have a pleasure to talk with Rob Kniaz, who is a partner at Hoxton Ventures. Hoxton is an early stage London-based VC fund with 4 unicorns behind his belt, and we had a pleasure to co-invest in a couple of deals recently. And today we are going to talk about what are some of the learnings that he got out of investing in unicorns, what are things that he looks for in early stage startups he invests in, and what are some of the learnings that he got out of being a product manager at Google that he can transfer to his investment activities. Hi, Rob. Pleasure to have you.
Hi, Maciej. How are you?
Listen, so let's kick off with the unicorn. So you have a couple of very, household names that you've invested: Deliveroo, Darktrace, Babylon. Let's start off with learnings from those. So what are the things that those companies had in common, or what have been the learnings that you got out of them?
I think the biggest commonality, if you look at the companies, they're all quite different companies. But for us, the commonality was really the very big market size. I think to make venture work, you really have to be thinking about how do you find really, really big markets. So either you're disrupting something that's already really large, or you're creating a brand new market. So if you think about a Deliveroo, it wasn't necessarily, a new market, but it was an existing market that was being destabilized by the advent of mobile phones. You could give every driver a cheap Android phone, track them, down to the meter and track where they're at. So you could make a lot more efficiencies in there. So when we look at every business, depending whether it's B2B or consumer or gaming, you kind of think about what's the really big market and what's the opportunity size. So if you look at our deals, with the exception of Deliveroo, usually they focus very early on selling into the US, because usually it's a bigger, more homogenous market than Europe. So even though the companies often start in Europe, almost always they sell very heavily into the US pretty quickly. Darktrace went very early into the US. Babylon went very heavy into the US, and now that's arguably their single biggest business driver is the US market. So I think that the common theme is almost always finding very large markets. There's plenty of great businesses that make a lot of sense, but don't get that multi-billion-dollar opportunity. So we kind of come in with every deal thinking about, is this a multi-billion-dollar type outcome? Can it be a $5 billion to $10 billion company plus if things go well?
So I couldn't agree more on the market size and how big the opportunity is. What I find founders having trouble with is, okay, so I'm building a solution. How do you put a number to the market I'm in? Like, how do I know I'm really in a big market that allows for this great outcomes if things go correctly?
Yeah, it's hard. You can do it from the top down and kind of look at market size. You can do it from the bottom up around, customer value. I think as a product manager, I kind of look at things from a kind of a core utility principle and saying, great, if this works, how valuable is it to me? And then how many people are there like me as potential users? So if it's a SaaS product around managing SMB finance, for example, you kind of look at, how big is that potential market? How eager are the customers to buy? So you kind of understand, is it something where overnight you have a lot of customers that are ready to sign on, or it's going to be a potentially slow build? You look at the friction of kind of going around the world. Some things are very easy to take globally. Darktrace as a product, you can take it and kind of sell it in any country tomorrow, right? You localize the currency maybe, but aside from that, it's a general product. Some things like Deliveroo are very market specific. So again, we kind of look at how fast and expansive is a company. Can it take over the world tomorrow, or is it going to take years to grow? So kind of all these different factors you think about in terms of that scale, and can it turn into an Uber type scenario, or a massively big growth company? Because at the end of the day, what matters in venture anyway is just that growth. At the simplest point, from the top level or from the top line, you're looking at, is that top line really growing fantastically high?
Okay, but there's a couple of points that I want to dig deeper on. Is first of all, like, this is all cool. But I think that for a lot of people, it sounds a lot more like art than science. Like, first, like, okay, so how do you know, like, what's the value? Like, especially you're being early stage, meaning you don't have the traction. You maybe have a couple of POCs that you've done, or you couple of early adopters, like, and then how do you extrapolate that? So do you look for, like, and sometimes, and we see it, a couple of different approaches. Sometimes people come in and say, hey, Gartner told this is a huge market and we are going to be a leader of those. And sometimes people come in with very meticulous calculations, which, have tons of assumptions around them. And this is not really the way we perceive, those assessing markets. We tend to be more, is it in the right trend on the right market, and does it generate enough value for the customers, and so that it justifies, generating, millions in revenues in a couple of years in the future. So how do you what is the approach that you like it best when founders talk about markets on which they operate?
Yes, I mean, it's always a little bit different depending on each company and the kind of product they're selling. I mean, to me, I think of the trade-off between, the value of a contract and the time to close a contract. Okay. That if you're going to wait 6 months to close a deal, you kind of think of like the human time, right? So if you have one human working 6 months, likely full-time on closing a deal, and a salesperson isn't necessarily cheap. So how do you think about that cost in terms of sales ROI? So at scale, if one salesperson can close 2 deals in 6 months, and a salesperson costs in the UK $300,000 a year, you kind of want to get a sense of the sale should be a multiple of that in terms of top line revenue to the company, because at the end of the day, sales has to pay for itself. Some things, like if it's a SaaS product, you can kind of go out there and have this crazy leverage where you're buying AdWords, or you're buying your reviews on G2 or things like that, and getting that kind of scale. So I kind of think of that spectrum around the velocity of sales closure and velocity of dollars, and also the size of the deal. And the worst ones are where it takes 6 months or 9 months to close, and you make 15 or 20K. Those are where I think it's really dangerous, because those are the deals that become very very sluggish, because you can't grow revenue fast enough. You have to overinvest in sales early, and maybe over time you can make that up, or you can grow the basket. But those to me are the trickiest companies. If I'm waiting 6 months for a deal to close, I want to see some serious revenue behind that deal.
Okay. And you yourself, you guys specialize in the early stage. You do pre-seed deals, you do seed deals, and usually at seed deals you already have some of those numbers that you've mentioned, and you have some ideas about what it can be on close time and all the others. How do you look at pre-seed deals then? Like usually pre-seed wouldn't have any of those, not just assumptions. So what do you look for in pre-seed deals then?
And this is where it's tough, right? I mean, to your point about it being an art more than a science, for the pre-seed, usually, for us, what we key on is, is there something we know about this space, or something we like about the opportunity? We may not be experts necessarily in the space, but there's something that tells us, it's a very binary type opportunity where, again, it's going for a massively big market. So to us, pre-seeds are by definition the highest risk, so they have to be the highest reward. So sometimes it's people that we know, or people on the Google network that we know and can trust, and kind of take an earlier bet on them. But usually it's a matter of the earlier the deal, the crazier it's got to be to justify the risk reward profile. So we've done a lot of things in sort of deep tech, where you're looking at machine learning applied to pharmaceuticals or applied to biotechnology, where if it does work, those are massively big markets you can disrupt, but there's plenty of things that can go wrong along the way. So for a pre-seed, if you balance the valuation assessment, then it kind of comes out of being worth your risk profile. But we assume also the pre-seed failure rate is going to be quite a bit higher than the seed. So you kind of price that into your risk profile. So you have to have an even higher bar for potential opportunity, but a lower bar in terms of what you're seeing now, that you're kind of taking a punt on the team, as well as the market, as well as the unknowns around the IP. I mean, usually there's 5 different categories of risk maybe in a pre-seed. So you're taking risk in all of them. And then eventually, if it works, you're kind of seeing the levels of risk diminish, right? Where maybe there's less product risk because you can show a product is built, or there's less tech risk that you can prove out the core IP works, or you can sometimes, take out some of the market risk if you have customers that say, I love this, I want this. So you kind of just balance those levers of risk.
Okay, that's awesome. I mean, one thing that you haven't mentioned in this, and which is actually very important for us, is the team and people who are building it, because at pre-seed you don't have much more than that. And there's a couple of points around around the team itself. Like, first of all, with current competition for deals, I see that there's less and less face time that you can have with the team, especially on the competitive deals, because they know they have choice and they don't need to spend this time with you. So what are like the traits or things that you look for when you meet those entrepreneurs, trying to assess, are they the right team? Are we gonna enjoy working together? Like, is there this chemistry?
Yeah, look, I mean, it's a tough choice sometimes. Again, to us, it's the trade-off of the market plus the team. So, if you're a great surfer but there's no waves, it doesn't really matter. Whereas if you're an average surfer and the waves are perfect, you can actually be a good, you can surf well. So I think for us, when we look at both those factors, are the founders ambitious? Do they want to build something really global? I mean, being a founder is a really hard job. It looks sexy from the outside and everyone wants to be a founder and get on the cover of Forbes, but it's really, really hard and often unpleasant and a thankless task. Spending, 5+ years of your life on one idea where, you have very concentrated risk. You're probably paying yourself less than your other options of going to work at a big company if you're halfway decent. So, it's a very risky maneuver with a generally low quality of life with a hopeful payoff at the end. So, we ask ourselves, is this person, do they want to go do they have that passion, or do they have that, kind of craziness that makes them successful? Because you kind of have to be, crazy to be a founder. I say this in a good way, but it's a not an easy business. It looks sexy when people read about the success stories on the cover of Forbes, but for every one of those, there's 100, bodies of things that didn't make it all that way. So we kind of look at the, if we don't know the founder already, we look at their resilience. Have they done it before? Obviously, multiple time founders they know what they're getting into, so they kind of have their learnings. Plus, they understand, this is not an easy task being a founder. And then, we overlay that with the market as well. That even average teams, if the market if they're at the right place at the right time, the market can make them fantastically successful. But sometimes great teams are just in the wrong market at the wrong place and can't do a thing. And so again, you look at that. Are they nimble enough? They can pivot around to find something that works, but it's a tough scenario.
Yeah, I like the wave analogy. There is something that was brought to my mind that when you said about people reading in press about the success stories. I also like the the overnight success that takes 10 years. 10 years, and it's like even when it's it's growing and everything, there are still pains with that.
I have a lot of empathy for founders. I mean, both of us have smaller funds in newer markets where it's not easy to fundraise necessarily so much. I mean, it's a long, painful journey, and fundraising in Europe is far more difficult than it is in the US across the board. So, particularly the smaller the city you're in, the harder it is to raise capital because there's fewer choices. So, being a founder in Europe has its opportunities. So you can find, amazing talent locally at different prices than you would in the US, but it's also harder to raise capital. So again, I think the upside is, the world is getting flatter every year, and you can be in Krakow or Wrocław or something anywhere really and sell in the US. And we have companies that are, from small cities that are entirely remote that generate the majority of their revenue in the US purely by doing, Instagram ads or for AdWords or, regular content marketing, taking inbound calls and emails. So to me, that's the opportunity, is that you're able to do this from anywhere now. And every year it gets easier. I'd say even particular in the past 12 to 18 months, the world has changed even more favorably in this regard, that Americans are doing deals entirely remotely by Zoom. Even London funds are doing deals entirely on Zoom, which is helpful for bringing more capital into the market. So for us, these are all factors that again level the playing field and make things even more equal globally.
And I think this is a bet both of us do right now, like that's going to be a global village, and someone being in Wrocław or Krakow or Warsaw can build a business that is going to be selling to the biggest companies in the US or in Germany or Australia, whatever. So this is the bet we're like, or the bigger wave we are all riding in a way. So that all being said, so what would be like usually when people think about fundraising, and I agree with you that it's probably tougher to fundraise in Europe than it is in States, but I also think that there is like the maturity of of the ecosystems, especially apart from London and maybe Berlin right now, is still on the rise, let's call it. So there's still some stuff that is, I would say, considered pretty basic, but there are some misconceptions about how VCs operate and what they look for, and also how to find a good VC. So what would be some of the misconceptions on the thing that you feel need to be clear out for the people to understand, for this cooperation to be beneficial for both?
When you think about investors and quality and experience, a lot of the best investors tend to be in California just because they have so much of a history of them coming out of Google or Yahoo or eBay and then starting firms or joining firms. Their networks are phenomenal. So I think of kind of the end game as almost always moving westward, where if you're successful, the U.S. is probably going to be a target market for you, and you're probably going to raise money in the U.S. over time. Maybe not in the very early days, maybe it's a Series A, maybe it's a Series B, and for sure by the Series C. But increasingly, the Americans are coming earlier where they're looking at Series A's. So when I think about the task of founders, it's how do you get to that point where you're globally fundable, and how do you break out of your initial kind of few proof points into something that shows that product market fit, and how do you really define that? So again, often the easiest product market fit, for getting to A's and B's with American funds is usually having American customers. So I think it's a challenge sometimes to break into that. But the good thing is, again, I think there's a far fewer barriers to entry now that, to get and to sell into an American company is not as hard as it used to be. It used to be, very quick, 10 years ago, if you're selling, B2B, and we're kind of talking on the B2B track here, especially, 10 years ago, it was having a salesperson that knew the right person at the company, that knocked on the door, that took that person to lunch. It was all, stuff that wasn't really well socialized. So if you're coming from outside this market, you don't know the customers, so you'd have to really hire a salesperson that knows your customers, and it's a big deal. Now you can see everyone's playbook, right? You can look at their content marketing, you can see what the best companies in the world are doing, and effectively use it to your advantage. Figure out how they're selling, what AdWords are they buying, what does their marketing copy say, what do their white papers do. You can go on LinkedIn and find your own customer list that's pretty good to start. It gets you a bootstrap. So to me, that those are, again, the advantages where founders with good hustle can put themselves on a lot more playing field, because there's so much more information out there now for them to find and hustle and resource themselves into.
Okay. And so what would be you get a deck from a company you don't know or haven't heard before. What are the parts that you pay the closest attention, what you're looking for in those?
Yes, honestly, I look at what's the core product of the company, or where are they in that product market fit stage? So it's, as a seed investor, it's much easier if they've already kind of found product market fit, or they're pretty close. So I kind of work backwards. So I look at the team going in and just understand, what's their kind of DNA? Are they engineers? Are they salespeople? Are they product people? You can kind of see for every company, there's sort of a core DNA of the company, whether they're, robotics experts or, DevOps engineers at the heart of it. And then I kind of skip to the product market fit to understand, what can you demonstrate so far, who are the kinds of customers you're talking to. And I kind of key on the things, if you're, in Warsaw and you're selling to a company in London, that's interesting. That tells me, that's not an easy thing. It's not and I always kind of discount local stuff to an extent that, if you're in London and you're selling to a London company, maybe it's, your buddy from university that you're selling to. So you always sort of ask yourself, how did this company make this happen? And so I look for, something unusual here. Is this company getting initial traction with people that are really reputable? And then sometimes you see, interesting things where, DoorDash is, using them as a customer, even though they're, 6,000, 7,000 miles away and have never met in person. I kind of look for those signals of, is there something interesting about this company that shows me they're not just, very iterative, but there's something that might be groundbreaking, where they're selling into new markets, or they're getting customers that are name brand customers that are arguably very selective type customers.
To give folks in the region maybe a better examples, so we are co-investors in Spacelift and Preploy, and you also have exposure to Nomagic and maybe some others in the region. So maybe focusing on those three. So what, in a nutshell, what got you interested in those,
Yes. So, working down the list, in the case of Spacelift, it was specifically that there was great engineering talent that personally we were kind of connected to through the Google and Deliveroo network, because the founder was at both. Of course, we knew you guys as well, which is very helpful around the table. Again, it was a very leading edge product, so a very hot space around Terraform. A lot of companies are investing in Terraform, very well engineered product, and early traction with companies that are seen as being very smart about this. So ideally, if you're building something that's innovative from an engineering perspective, you want the best kinds of customers who are saying, we're looking at everything in the world and we think this is the best solution. So it's kind of keying on that very early, that they had very good customers that weren't just folks down the road that they knew from uni, but folks that were, legitimate customers they fought their way into and were able to win big size deals. Preply, again, going after markets, for them, they initially were very CIS focused around Eastern Europe, and interesting, but relatively comparatively low GDPs, and again, relatively lower market in terms of people who are able to tutor and buy and sell and pay a reasonable price. So the company pivoted really heavily to focus on the US student market. So they, within a kind of an 18-month period of the founder deciding to do it, the US became his biggest single market, and that's pretty impressive. So again, it speaks to something really working, that either the team is executing really well, or they've made a globally excellent product that's able to beat out all the competition. But if you can win in the US, usually you can win anywhere else. So for me, at the point of entry, you could see that these guys were able, despite being in Kiev and not having any presence in the US, they cracked the US market and made that, a very sizable market for them. So that was really impressive. And again, same thing with Nomagic. It's a very global market where they sell. So this is a company selling robotics. Europe actually has an advantage there, that a lot of the European companies probably have invested earlier in robotics because there's more precision manufacturing than the US. So it's a case where Europe is actually as interesting, if not more interesting, than the US. So certainly, the Walmarts are interesting customers, but also the BMWs here. And same thing, they had gotten early customer reference points where, they were in pilots, but pilots with serious customers that are, talking to all the big manufacturers in the world of these kinds of products and saying, I'm choosing Nomagic because we think it's the best we've evaluated out of the 10 things out there. So in a way, the customers kind of do our work for us. And if we see a customer that's very smart saying, we looked at all the options out there and we chose Nomagic, it's a pretty good sign that other people will do the same. And you can then extrapolate out and say, okay, this could be a really big company.
That's a really interesting point. I think that's what distinguishes some of the companies, the companies that we perceive as more exciting than the others, is that they understand, or maybe by chance, but I just have this tendency to go out and sell to, bigger clients in either London or in States. Whereas there's a group of founders that, build something that might be, super interesting, but then they sell locally. And it also has its drawbacks because, I would say that, buying power in the region and the willingness to go into innovative solutions is not great. So there is a paradox that it might be more difficult to sell locally, and then it's not as telling as an early sign whether you have a world leading product or not, because the conception is that everyone's going to States with their software, and if you can win a customer in States, it's probably worth 10 customers in Poland because people just perceive it as a more competitive market, and if you can win there, you can probably win everywhere else. So this is I think extremely interesting, and I think we'll see more and more this move west, as you mentioned before.
And it's tricky because, depending on the sector of business, some businesses, again, are very localized in what they do. So if you think about like fintechs, a lot of fintech opportunities are around pairing with, all the right banks, all the right service providers. So you may have a fintech that's paired up with all the credit card providers in the UK, but then going into France is actually really hard because you kind of start from scratch and you have to build relationships with the local banks. And there's all this PSD2 stuff where you can scale across Europe theoretically, but still requires a lot of the kind of last mile tuning. So oftentimes, we'll see a company that's, done a great job in Poland, that's locked up all the local banks. And so there's a local advantage they have, but then going into the next market, you're kind of you're starting from scratch. So it doesn't give you that much opportunity along the way. So when I look at businesses, I like to try and see, is there compounding value where once you have a playbook, if there is localization required, once you have a playbook, does that playbook also scale really well? And things like fintech are hard because usually you have to go to a cluster of the 5 or 10 biggest banks in every country, make sure they want to partner with you, or figure out how to work with them, figure out what the right accounting packages are, because each country has their own SaaS accounting. So it gets really complex where there's not an easy way of saying, great, we're going to turn on all of Europe. It's kind of great. We do France, we do Germany, we do,
And there is also this point of, US being more homogeneous as a market itself. Like selling in Europe is great, and you can build local defensibilities through what you just said. But then again, expanding and building scale is so much more difficult because you have different legislation, different regulation, different habits, different languages. It somehow feels that cracking states. You can think about it. Okay, states might be similar in size to Europe, but the complexity in Europe is an order of magnitude bigger, right?
Yeah, exactly. I mean, I think one of the things that I've seen consistently is if you look at like the big enterprise software companies, like the early Oracles and IBMs, a lot of them did analyses, and I've read some of these kind of summarized over time. But you look at Salesforce effectiveness, and Europe is 20% harder. So that's kind of a vague term, but if you look at the different components, depending on the kind of company it is, deals take 20% longer to close, or they're 20% smaller, kind of on a dollar by dollar basis, or they're 20% fewer in terms of volume for the year. So it just winds up that dollar for dollar, if you're spending on sales and marketing, or you're spending on a team of people, usually it's just that much easier to sell in the US. So whether it's friction or, Americans love to buy new stuff. I mean, I say this as an American. Americans, love to buy magic beans. So if you're in, someone's selling you some cool idea, Americans probably have a higher likelihood of trying new stuff, right? They're less conservative, and, a lot of, historically Europe has been a more conservative place, right? So if you're running a Mittelstand business in Germany, you're probably not that, necessarily tech focused as a small employer in the US might be.
We had this case in Spacelift, right? Like when also I think when in certain industries, like the innovation curve is further down in US. So when they talked with customers in Europe, it's been a tough sale, but when they move to US, people understand those pain points because it's, they have already been there and tried to solve it by the, traditional means, and they understand the problems that comes with scale. So I also think that from this perspective, if you're building something truly innovative and you understand your industry inside out, it might play to your benefit to go to other people that understand that. And to your point, risk averse is probably much higher in Poland or in Germany, and also, I also really feel that the amount of dollars that you can extract out of client in Poland is much lower for the same amount of effort that you put into selling the product.
Yes, to me, it's always a factor of, the effort versus the reward. So, if you're going to spend that much time on sales or marketing, like arguably all things equal, try and go after the most juicy targets first. And then again, competitively, if you're thinking about, a world where for any idea, more than ever, no matter how innovative it is, there's someone else that's going to be doing the same idea. You have a globally competitive pool, and frankly, that's going to require capital. So if you're in a business that's venture backed, or a sector that's venture backed, you might have a great idea, but you're in a race, right? You're in a sprint, and there's going to be someone else who might be faster out there that's going to raise more money. And this is how Europe used to be, and it's changing now. It's a lot more equal footing. But 10 years ago, it was kind of a intrinsic bias that you couldn't build something big here because you could never raise as much as the American competitors. So even in the pre-Rocket era, right, you had local people who were doing classifieds, they're doing auctions in every country, and eBay would say, great, once one of them gets to have a plurality of the market, we'll buy them and pay 5x revenue. So you saw a bunch of local auction sites that got rolled up, and they got okay prices, but they were kind of $50 million, $100 million deals. Whereas why didn't one of them become eBay? It's because eBay was early and very well funded and became globally dominant. Nowadays, building an Uber in Europe is still hard because there's still not as much capital. But ideally, over time, you should be able to build things like an Uber from anywhere if you have that level of ambition and capital behind it.
That's true, but I think it's also changing. Like on like the argument that some people are raising is like, look, Europe is cheaper, which admittedly is getting less and less so, but it's cheaper in terms of price of work, so you can build it with smaller funding. And also you have Bolt and a couple of others heavily funded companies from Europe that did a mark on a global scale in customer business, where I think it's increasingly important to have this kind of financial backing to be able to build a global perception of your brand. Good. Like, let's maybe switch through this point, like, because I think it's also, interesting about, we touched upon it from different perspective, but, at an early stage, like what drives you very often is how good is your product, like whether you can compete on a global scale and like with anyone, whether it's, Silicon Valley, Chicago, London, or Warsaw, like, are you really truly the best? And, building product is tough. And you've spent 4 years as a product manager at Google, and you made a very maybe not controversial, but strange move from the perspective of someone living in Europe. You decided to move from States to London to build your venture fund. But I wanted to touch upon like what are the learnings that you got out of being a product manager at Google, which notably is regarded one of the best organizations in teaching and building new products, and how does it affect your how you look at investments?
Yeah, I mean, being someplace like Google, is a fascinating opportunity, right? Because it's like being a founder with a safety net behind you that you have, depending on where you are in the company, you have a very interesting opportunity to take advantage of all the scale and all the platform abilities. And with Google, I was working mostly in ads. So we had, a tremendous number of advertisers. That number was growing because people went to Google by default, right? If you have marketing money, you're going to come to Google. So it was really, we could have a lot of flexibility with trying new things, trying new products to bundle in. But again, it's very much a skill that you kind of learn on the job. So, I didn't really know anything about product management. I had a computer science background, but it's a job you learn through apprenticeship. So kind of like venture as well, there's not really books on it, and it's hard to train on it. It's a job, like being a plumber, where you have to, ride alongside for a couple of years. And I was fortunate to have, really great people in the early days that were, teachers that, you kind of learn from just by watching and see how they scale it. Because at the end of the day, product is really, it's being a founder without actually having authority of management. So no matter what, you're sort of managing from the middle, where you have a task that you're sort of the responsible one for, but you don't really have P&L responsibility. You have loose ability to function as far as budgeting goes, but you can't hire and fire people necessarily. You're kind of in a matrix environment where you're working with other teams. You're trying to get resources to do other things. So it teaches you to be, in that environment, the Google environment teaches you to be fairly resourceful, where you're, again, kind of managing people through, carrot and stick, but you don't have much of a stick. So how do you try and convince people that we're all lined up, we're going the right direction? So yeah, it was a really unique opportunity that I think helps you look at companies and figure out, how do you think about growth, and how do you think about, finding unfair resources? In the early days, one of the beautiful things about AdSense when we launched it was we had a tremendous number of ads from google.com, and it was really easy to take them and put them on, a blogspot blog post, because they're all text format. You just format them in the format of the blog and you're good to go. So we had this crazy network advantage where we could launch a content network from scratch and have, full ad content on it from day one. So again, looking at startups, it's the same kind of thing of, what advantages are there out there? Who are the partners you can partner with, or, what gives you that sort of exponential capability really early?
Okay. And do you have I think it's fascinating, and the times where you've been at Google, like I can only imagine the network that has been over there and people that has worked there, like this is all, pretty incredible. But right now you're in VC, and, companies in Europe tend to have a hard time finding good product managers. So do you have any hints for them, like how to either develop this skill set internally if possible, or if not, like how to attract the talent that actually have this skill set?
Yeah, if you look at the Valley and some of the best PMs that came out of Google, like Brett Taylor at Google, who now runs Salesforce, basically he's the president of Salesforce, and he was an early PM at Google. And you basically find people that are intellectually curious and are generally kind of polymath. So it's not always computer scientists. Sometimes it's biologists. There's a general technical acumen you probably need to have to build trust with engineers, but it's kind of that high EQ, the ability to really, the intellectual curiosity to figure out, how should I be doing things? What should I try? Can I be creative in new ideas? It obviously helps if you have people that come out of these organizations. And again, the value of Silicon Valley is you can go there and start a company tomorrow and say, great, I need 2 product managers. you can find, 1,000 from Facebook and Twitter and Yahoo and Google, and they all kind of know the playbook, right? Because they've been trained up. They know how to run OKRs. They know how to build a product roadmap. All these things are kind of already trained up. So if you don't have that, it's a lot of trial and error sometimes. So if you're in a place that you don't have access to this kind of talent, you can learn more. Every day it gets easier. There's more things out in the web. There's more tools, but it's still sort of a business where you're teaching yourself. So you're going to make mistakes, and you're going to. But again, you get better over time. So I think it's one of the challenges that as we have more generations of companies here throwing off this talent. Again, if you rewind 10 years ago, there weren't any companies in Europe really throwing off California style talent, right? Or people, there was no place you'd go and say, great, that person is well trained as a product manager. Now, you're seeing the Spotifys and the Klarnas and the Deliveroos and the Adyens and all these companies that are now kind of getting big and post IPO that have. Spotify is probably one of the most well known now of people that are respected for being good PMs that are now leaving to do their startup, and they're training up a dozen younger folks that are fresh out of university. So it creates this virtuous loop that over time should create lots of PMs, and each one's training up 10 more. But it's a patience game.
Yeah, let's hope for that. I think that those kind of loops play out everywhere, or even on a small local scale as well. So let's hope it happens sooner rather than later. I also think that one interesting aspect is with US being a little bit difficult on getting visas and stuff like that, you can sometimes maybe try to approach people that have been there but might want to come back. We had some success in our portfolio companies with getting expats that are just for personal reasons want to come back home, but they have come from this environment where the product management skill set is taught, and I totally agree with you that it's more like apprenticeship model where you need to have your master to be able to learn the craft, and it's difficult to learn that all through reading, and learning by doing takes a lot of time, and sometimes you just don't have it.
There's a lot of trial and error. I think people like you talked about, those are the real unicorns. If you find someone that's been in California, a Polish product manager that wants to come home, those are great opportunities when you can find them. They're obviously very rare, but it's a better time than ever to pull people out of the US, people that want to be home with their family, or people that are reprioritizing and saying, I want the kids to grow up near grandma and grandpa. It's a unique opportunity. So, London is fortunate that, it's easy for Americans to come there. So we're seeing, more and more of that every year. But, every country has its own diaspora of expats that are, and France has tons of people in the Valley. So we're always delighted when we see people that are coming back, because it's another way of getting that knowledge in. They may have trained up at Facebook themselves and they're coming back home. And you've seen this with some of our companies, they bring in that talent and that expertise.
On that front, what we see from time to time is people coming in with that they're building something innovative, but they don't really distinguish building a great innovative technology from building a great innovative product, right? So what would be your hints to people that are building something because maybe it's my personal opinion, but technology is not worth much if it's not a product. Products usually need some kind of technology, but if you have only technology and this is the only thing that you focus on, it's very difficult or impossible to build a big business out of that, at least through a traditional VC route. So what would be some advice that you can give to people building early stage to make sure they focus on product rather than technology itself?
Yeah, I think it's exactly that. It's invest where you have to invest, but don't overinvest. If you look at the companies that win, it's not. In fact, I'd say it's rarely the ones that are the absolute best technology that wins, with the exception of core IP around science or chemistry or some amazing new algorithm in quantum computing. It's the companies that can commercialize the best. And if you look behind the scenes, even in the best Valley startups, they look like a disaster, right? The systems are barely up. Twitter for a decade was a poorly engineered company in terms of reliability and maintenance, and people tended to leave pretty quickly after they joined because they realized it was a thankless task. But it turned out to be a really big company. So I think with any kind of technical founders or product oriented founders, it's a matter of balancing out your cost to reward. And if you have to do things manually, that's fine. No one's going to hold that against you if you're using an Airtable and half of your business runs on Airtable. Yeah, that might be perfectly fine. Eventually you'll have to engineer solutions, but if you can get by with that, better you focus on getting to market and showing product market fit. And the best problems to have are where the wheels are falling off and you just can't scale fast enough, because that's a problem you can throw money at generally, and that's a problem where money will find you. So even with Twitter, they were always able to raise money because their growth was always really good, so they could kind of solve their problems by throwing cash at it. To me, those are the best scenarios where even if it's poorly engineered, if you can throw cash at it and solve the problem, but you're growing, that problem will kind of solve itself.
Okay, interesting. Very interesting. I think that our time's up, but it's been a lovely discussion, Rob. Thanks for being with us, and thanks to all of you for being with us as well. I hope you found something interesting that you can put into action right away out of this talk. And don't forget to subscribe to our channels on YouTube or LinkedIn and on Twitter. That's it for today. Thank you very much for your time, Rob. Pleasure having you.
Pleasure. It's good to be here. It's nice to be back in Warsaw.
Yeah, that's true.